Hi everyone, we've just released our letter covering the first half of 2023 and I wanted to share the highlights with you. Over the first half of 2023, the economy, the stock market and Montaka's portfolio have all performed better than many, including ourselves, had expected coming into the year. In particular, the portfolio has appreciated considerably and we've been asked if we're selling the top performers to take short-term profits and look for better returns elsewhere. And the answer is no. Instead, we're staying the course with the winners in the portfolio because we believe they can multiply in value many times over in the future, with this year's gains a pleasing milestone along the way. The US economy has been surprisingly resilient so far this year. Remember, we ended 2023 with a threat of recession. We also had stresses emerging in the banking system late in the first quarter and fears that a debt ceiling breach would cause a government default in the second quarter. In fact, until now, the biggest drawback to the robust economy, the resilient consumer and buoyant labour market, has been stubbornly high inflation, which has required higher for longer interest rate settings by central bankers. But recent data indicates inflation may be slowing to acceptable levels. The Fed's rate hiking cycle might be coming to an end quicker than had been forecast, and a rate easing cycle may even be closer than previously predicted. So while we don't attempt to forecast the economy, we do believe a backdrop of stronger growth, tame inflation, and the end of rate rises is more favourable for companies and stocks. And the sharp rise in equity markets this year has been nothing short of astounding. Many investors had written off stocks after last year's heavy falls, but for the first 6 months of the year, the S&P 500 is up 16%, its best performance since the first half of 2019. And the tech-heavy NASDAQ index surged 32%, its best first half in 4 decades. What's been remarkable is that just a few big tech and artificial intelligence leaders have driven almost all the stock market's rebound. So for example, Amazon, Microsoft and Alphabet together contributed nearly 30% of the gains made by the S&P 500 in the first half of the year. And we previously identified these 3 owners of the hyperscaler cloud computing platforms as the clearest and most certain winners from the AI revolution in our white paper. Moving on to the portfolio, Montaka had a standout performance in the first half. But even after the share prices of the portfolio's top holdings have risen impressively this year, we're staying the course with them because we see even greater upside in the future. The stock prices of each are still cheaper than they were at the beginning of last year, but their businesses have improved and new amazing opportunities lie ahead. In each case, the contrast is too stark to ignore. And in the letter, we go through why this is the case for each of our top 5 holdings. So while we made minimal changes to the portfolio during the second quarter of 2023, we did add to our holding in KKR and we sold AMD, which had gained more than 60% since we invested earlier in the year. And you can check out the letter to read Ahmet's case study, which shows why we think KKR is such a compelling opportunity right now. So looking ahead, we don't anticipate any material changes in the portfolio over the course of the rest of the year. While we remain price aware, the market would need to present us with much higher share prices for us to loosen our tight grip on the wonderful opportunities in the portfolio. So that's all for this quarter. Make sure to check out the full letter, and I look forward to updating you on the developments in the portfolio again next quarter. Bye for now.